Hello, everyone. Welcome to today's live stream. I'm your host, Thomas from Bybit. So Mantle Vault has reached 100 million USDT in a very short time, and now we have reached another milestone, now 120 million USDT AUM. In a short period of time, something is happening. In fact, something is changing in the crypto world. With all the volatility happening, with all the geopolitics, with all the different uncertainties happening, we are focusing on trust and stability. So what does it mean? Is something changing in the crypto world, or are we looking for something different? Joining with us, the speaker today, we have Jerry Lee, Head of Earn and Wealth Management from Bybit, Luffy He, Founder of the CM Protocol, and Joshua Cheung, Head of Product from Mantle. Today's live stream, we have 4 sessions. First, we have looked into what this milestone means and what it represents for our users. Second, we look at how this product works, which is going to be interactive. We have a product demo and some strategy talks from our users on the line. Third, we also have our committed landscape, looking at what's available, what's missing, and what are the trends in the future, and followed by Q&A. And before we go any further, I'm here to remind you we have red packets happening in this call. So round 1, we have one existing users for 400 existing users, sharing 250 USDT in trading bonus. All you need to do is to trade at least 100 USDT to qualify. And the second round is for the new users, also 200 USDT shared by 100 lucky new users. And all you need to do is sign up and deposit 100 USDT at least 3 days before the live stream. So you haven't done it, now is the time to do so. So before we go on for the first segment, probably we'll go around the floor to have our guests introduce themselves. Jerry, would you like to start with introducing yourself?
Yeah, thanks for having me, guys. Good morning, good evening, good afternoon, wherever you guys are. This is Jerry. I'm the head of Earn and Wealth Management of Bybit. Very glad to be here. I haven't done a live stream for a while. Very excited to share our latest product and some pretty astonishing achievement over such a short period of time. Very good to be back. Thanks, Thomas.
Thank you, Larry. Thank you, Jerry. Very nice to have you. And Joshua, would you like to introduce yourself?
Hi. Thank you for having me. Yes, thank you everyone for being here. So my name is Joshua. I'm the head of product at Mantle Network. So Mantle is a blockchain, an EVM blockchain powered by MNT. So I'm sure if you're Bybit users, you also see MNT a lot over every product line. And we're very happy as a piece of infrastructure that's supporting decentralized finance and vaults, making this product possible. Yeah.
Great, thank you very much. And last but not least, Luffy.
Sorry, just noticed that the microphone was muted. So thank you, Thomas, for the intro. This is Luffy, founder of KM. I would like to define myself as a DeFi OG. We actually started to play DeFi, different aspects of DeFi, building products in DeFi and doing strategies in DeFi since the end of 2019, before DeFi summer came into play. So, we are proud to define ourselves as sort of a DeFi veteran. And about 3.5 years ago, after we've been working on different yield strategies for about 2.5 years, would like to convey all of our experiences and automation tools to public through KM. The first protocol we launched, a on-chain yield strategy platform. So by far we've been growing into a $1.5 billion product, managing assets from retail users and institutions. And it's a really great honor for us to have this cooperation with both Bybit and Mantle to provide the cutting-edge infra for on-chain yield strategy and provide the most advanced on-chain yield strategy to to the public through Bybit and Mantle platforms.
Great, thank you very much for the introduction. We'll definitely go more into Kia and how that works, because it is a very integral, it's a very important part of this Mantle Vault, and we want definitely the floor would like to know more. So let's look into 100 million AUM. What does it mean? And before I go to that, let's look into what Mantle Vault is. Mantle Vault, Bybit's on-chain earned native stablecoin yield vault, is designed to provide market-neutral yield with a simple CEX user experience. Partner with the Mantle network and Kian, we offer stablecoin holders to earn returns from audit protocols, providing access to transparency and low risk than speculative trading. In recent market volatility, which you all know very, very well, stability and trust have become a hot topic. With great user experience in mind, namely on your on-chain yield with an on-chain hassle and a low threshold, this is probably why it has surpassed 100 million USDT AUM in just a matter of fortnights. So question to you, Joshua. Being a part of Mantle and of Bybit of this product, I hope Mantle stresses on automation and of fees and cross-system integration. Walk me through Mantle's philosophy and how it's used here.
Yeah, thank you. So earlier when I mentioned Mantle is a blockchain, but it's actually quite innovative as a blockchain. So firstly, it also what we call a layer 2 system blockchain on Ethereum. It completely a blockchain on its own, has its own token and all that, but it has deep interoperability with Ethereum through what we call zero knowledge bridging. So it's just a fancy technology word that says that it's extremely secure bridge technologies towards Ethereum. But we also use things like layer 0, for example. So we also have strong interoperability even to Solana ecosystem. The security is a very critical part of the operations later when we understand how the vault works and where the yield comes from. But essentially, what it gives us is the ability for any liquidity, so stable coins that are contributed in these vaults, to go anywhere across the entire Web3 and blockchain world, beyond just Mantle, and to find yield sources and opportunities of earning everywhere. Right, so liquidity movement is fast. It's almost like instead of in banking infrastructure, it takes days. Movements of liquidity can just take 15 minutes into Mantle and about a couple hours out of Mantle. So makes it both secure and much faster than traditional kind of finance infrastructure.
That is amazing. I'm sure everyone here has gone through, waiting for a very long time for the transaction, and also with not much certainty. And with this, sounds very disruptive and very revolutionary. At the same time, as you said, sounds very safe. And over to Luffy, this infrastructure is also made possible by the Kian protocol and the train infrastructure. What does it mean to the user, and what does the audience need to know about this network and how it benefits them?
Right. I think I just briefly touched upon the history of Kian network, and then I'll probably address a couple points, starting from the security. So to everyone, security is definitely the number one step we gotta take care of. And for Kian, what we're proud of is the zero security exploit, zero forced liquidation history in the past 3.5 years operation time. And what's also interesting to know is during the October market fallout, a lot of funds, a lot of protocols, they were impacted. Fortunately, Kian, because a pretty solid security scheme and all those stringent requirements were set on the securities, we did not get impacted. I'll come back to the security in a little more details later. Now, another thing that I want to address about Kian as a yield strategy platform or yield strat protocol is how it's different from a individual on-chain yield strategy or a fund, a closed-end fund that runs strategy on behalf of its clients. There are, in general, 4 things that we, might set different standard than an individual or a fund. when we were picking up, yield sources, protocols we're gonna use, and strategy designs, strategy categorization, risk management, a lot of things. First is security. Apparently, here security of a open and on-chain yield product, its standard is totally different. Second is scalability. If we were working on on our own funds, 10K bucks or $1 million, well, you have a lot of options. Unfortunately, for a large scale on-chain yield strategy platform, you don't have this options. You gotta pick the most scalable yield sources and the protocols to work in order to accommodate a large amount of assets in the strategy. And sustainability is apparently another thing that we got to take care of. Unlike a closed-end fund or individual who is obviously more flexible in moving their assets across the different yield sources, for a open and larger scale product, sustainability is something we got to take care of. We got to make sure the yield sources we use, the strategy we compose, has strong sustainability so that users' funds do not have to move from here to there frequently to incur a lot of friction cost. And last but not least, APY apparently, that's also something we need to take care of. But unfortunately, compared to individual and smaller fund, well, APY is less important compared to security, scalability, and sustainability. But still, that plays a huge role here. Now, I probably could quickly go through the process for us to build an operative strategy to identify the differences in a standard we set differently through different steps. First, when we're gonna build a yield strategy with the partners or for partners, the first thing we're gonna do is to identify the yield source. And the standard we set for yield sources identification is apparently different if we compare the two in an individual. As I mentioned, security, scalability, sustainability, APY. We could accept a slightly lower APY because we have strong capability of amplifying the APY through the strategy design, through the automation to make up this difference. And therefore, we put a lot of weight on the security first, and the scalability, and the sustainability. And in this case, what's interesting is if we look at the vector of yield sources available on the market on chain for us to pick up, well, at the end of day, there were no more than a handful of yield sources that we could select because of the standard we set. Second, the protocol adoption. Well, that's another interesting topic. So there are, tens of hundreds of thousands protocols on different chains available out there. But unfortunately, well, there were no more than 5 DeFi protocols we could use in our strategies. The only protocols we could select are long-term battle-tested, larger scale protocols with a pretty strong liquidity and with a quite strong team. So if we set auto standard, well, unfortunately, there were no more than 5 protocols on top of which could be larger scale on-chain strategies. And apparently strategy categorization is another thing that makes a lot of sense for us when considering building a strategy, because we build strategies for public. We cannot select those temporary, smaller scale strategy for users, because that's going to create a lot of uncertainty and friction cost. And then strategy design. Well, when it comes to strategy design, I'll probably describe it later. But there were so many details we got to take care of when you compare the process with building a strategy position, say a simple looping strategy position by an individual. Almost every aspects are different. And then Automation also plays a huge role when we build a strategy and run a strategy. We got to build a lot of smart contracts to replace the manual, implementation of the strategy, the manual operation to build a strategy position, or the accident position, because we got to handle the deposit requests and accident requests at a much higher frequency than what an individual user is going to have to do. And we also got to, handle the larger scale rebalancing of the position to make sure we have a balance between capital efficiency, flexibility, and security to make sure there was no liquidation risk. To that end, we have to come up with a slew of advanced automation tools to make it advanced, fast, transparent, and decentralized. Next step, strategy risk management. We got to make sure, we have a pretty complete set of, strategy monitoring parameters, and we have to make sure the monitoring works with a pretty strong backup to make sure there was no downtime. Otherwise, for a on-chain strategy, it's really risky. And risk management is also, something that we got to put a lot of effort on. For those, we categorize risk management operations into two groups. Low frequency one. For those, we got to, go through the team decision, probably together with a Mantle team, with Bybit team, to make large calls. For high frequency risk management operations, decentralized automation is needed to avoid the impact of network congestion. That's one of example. So in order to avoid on-chain liquidation, when the market is volatile, we got to make sure, our rebalancing transaction could be stuffed into one of the next two blocks, even when the network is super congested. How to do that? How to achieve that? We got to, work together with some of the best and the largest block builder at the bottom level to make sure the strategy transaction could always be, built into the block timely. And apparently, strategy operation, it's super important. How to handle user deposit, how to handle user exit, how to handle large users deposit, smaller ones, to make sure there is a balance between flexibility and capital efficiency. Well, that's something important to us. I think this is how a larger scale strategy protocol different is with the individual on-chain yield strategy and on-chain funds.
Okay.
Thank you, guys.
Thank you very much, Luffy. Thank you for the very deep dive into how KN works and how it's going to benefit the user. But let's take a little bit the ball a little bit back to the market and the investor side of things. So my next question before we go into a live demo is for Jerry. So two questions for you. First is that with this accelerated rate of growth, we're hitting 120 million AUM that quickly. What does it say about the market sentiment, and also what a customer for is the market downturn?
So basically, I'll make this very straightforward, right? Bybit Earn is right for building products that is suitable for every single market condition and through different yield sources, and working with the partners as well as the most reliable or bulletproofed, or as Luffy mentioned, the battle tested protocols. For number one is stablecoin yield has always been our top priority in terms of Bybit Earn offerings. If you look at the proof of reserve of Bybit, I think more than half of the entire Bybit assets are stablecoin, right? A lot of them, yes, are traders, but quite a bit of them are just looking to deposit their fund in centralized exchange to get yield, right? And that's why we need to be super innovative as well as considerate in terms of what type of product that we offer, right? Most of the centralized exchange offer stablecoin yield in a very, very similar way. You go to flexible saving, you get a 1%, 2% flexible yield. You go to a fixed income, you get this and that, right? Most of the yields are very, I'll say it's all of them are offering the exact same thing. What we're trying to offer is a complete different angle. It's asset management on chain, right? With a different protocol, with a different chain, right? So this is number one. Number two is I think what the market, what the clients is looking for is always different yield sources, always, right? You're looking at some clients are are CFI savvy. They only want to have their funds exposed to CFI exposure products, but a lot of them are DeFi savvy, but they don't. Even though they're DeFi savvy, they don't want to manage their wallets. They don't want to manage their private keys. They don't want to manage transactions all by themselves. And that's where we come in, right? We come in to help them facilitate complicated transactions or complicated strategy in a matter of just a few clicks, right? And that's how we our design philosophy and what we bring to our clients in the product. And speaking of the product itself, why don't we just jump into a live demo of how it works, where it is, how it works, and by the time I show it, you will realize how simple it is just to get 6-7%, just a few with a matter of a few clicks.
Sounds great. Let's jump into
Let
it.
me do that. Let me do that.
And by the way, for the audience all around the world, the first round of replicas have been sent out. So if you have one of those lucky few, good for you. And for the new users out there, the second round will be scheduled in roughly 8 minutes. So if you are aiming for that, let's get ready. And over to you, Jerry, whenever you're ready.
All right, can you guys see my screen?
Yes, perfectly.
Perfect. So it's extremely simple, right? I think for most of the users who are already extremely familiar with Bybit Earn, where the products are, and I'll walk you guys through step by step how to find it, right? Number one is go to finance. There's Earn and Advanced Earn. You go to Earn, and you see this on-chain Earn, right? And right there, it's right here, right? You stake your USDT into Mantle Vault, or you stake your USDC into Mantle Vault, and that's it. All you need to do is click on Stake Now, input how much you want to invest. Let's say I have $15. I think I can invest with $15, right? All you need to do is Stake Now. I understand. Click the T's and C's, confirm. That's it. That's done, right? So a few things to watch out when you are subscribing. Number one is the yields are floating on the actual return. So it's not a fixed income product, right? The yield is floating actually frequently on a daily or on an hourly basis, right? It's floating. This is number one. Number two is gotta be very careful in terms of the stake and the redemption, right? So basically, the actual staking process takes only 1 hour. So we'll facilitate all the on-chain transaction and everything within the hour. So we're going to bulk a bunch of transactions together, send it to Mantle, send it to Keon to facilitate. But in terms of the redemption, because it involves with a bit of a strategy on-chain, when you rewind the position, it takes a bit of time. Usually when we facilitate, it's around 3 days, but it could go all the way up to maybe sometimes it's 1 day, right? But it could go all the way up to 3, up to for now. Later it might go up to 5 or 7 or whatever. But we're gonna update the estimated processing of redemption right here. So when you subscribe, you gotta be very, very careful in terms of reading that redemption processing time. So far at 3, I've staked it, I redeem it. It usually takes 1 or 2 days at max. So this is not a whenever you want to exit, you can exit type of product, but the redemption period is pretty short, right? It's usually 1 to 3 days, and it's that simple.
That's very good to hear. it sounds like it is something very simple and it's very effective. At the end of the day, less is more. Am I correct?
Absolutely. So like I said, in terms of our asset itself, our product offering, USDT, USDC has always been our top priorities, right? Because it serves the most amount of holders on the platform, right? So with this product, the fact that we launched it with less than a month, and now having over 120 millions of AUMs, that result speaks for itself, right? So, and that's what we've always been striving on, is to build and offer something that really works for our client.
Great. Well, before I open the floor to all the experts on the show today, I have one last question to ask about the user experience, Jerry. So when people sign up to Mantle Vault when they stake, what are the biggest questions that they ask? And what do you have to say to answer that?
Always, there are. I've got this question a million times already. I think I'm capable of answering it. Number one, it's Jerry, where the fuck are you getting 6% in a shitty condition like this? Right? This is the top one answer that I get. So actually, we are very, very transparent here. We are, we don't want to. We can even show you how to do it if you're really interested. Actually, we work with we deploy some of the strategies on Aave, which is one of the, I think it's not one of the, it's the biggest DeFi protocol that we work with. And there is some sort of incentive on the protocol itself when you stake some sort of stable coins with a leverage. But it's super safe because the Oracle itself has built-in 1-to-1 ratio for the stable coin that you provided. So it's not like you can actually easily trigger a liquidation risk in a centralized exchange. So this is number one. Number two is, Jerry, this is an on-chain earn product. Why I'm not paying any gas? Why there is no private key signings and stuff? This is number two. The most one of the question that I get very often is a Bybit on-chain earn is a DeFi product built into a CeFi. So we're actually building a CeFi experience, but on top of a DeFi yield sources. So basically, what we do as a centralized exchange is what we're going to bring you that yield for you on the centralized exchange without you managing an actual signing and transaction, without having you managing an actual key. Right, so that is all on us. So we will protect you from the wallet setup. We will help you on the wallet signing. We'll help you on all the actual transaction setups and stuff. Right. So those are the top two answers that I get for the past a little while.
Okay. Sounds like it's really the smallest things of looking after the user and then sort of the pain points that how we build trust. And as we see, 100 million AUM, that is definitely a show of trust from the market. Okay, now the question to all on the call today is, so what are the gaps that this product is trying to fill? So this is not something new in the market. We have something similar by, like, for example, from other competitors. But why does this product stand out? Just want to go around the floor and see what we think. Anyone like to start first?
Yeah, maybe I'll just top up to what Jerry already explained. I think it's a really great explanation about how the product works. But if you think from the user's perspective, already from what he has just mentioned, it's so simple, right? So the simplicity of a strategy that you otherwise would have to do multiple on-chain operations yourself to achieve that potential 6%. It itself requires so many multiple clicks. You also need to manage wallets. You may need to move from one chain to another chain. You may need to switch RPCs, all these different things. But this is all already behind the scenes and automated through strategies and that we have already been in place. So that's the first thing. So it's extremely simple. Secondly, the second reason would be because of the underlying yield source is the Aave marketplace. That's a marketplace of at least 35. I think more recently I quickly looked at it, 35 to 40 billion dollars of market size and borrowing and lending. So it can easily absorb this rate of interest that we're looking at and maintain those rates in a sustainable way. So from a business model perspective, it's good for our users, and it's also good for the business as distributors of the product, because it's not something that we have to heavily subsidize for these rates. And I think the final thing is because all this is also within an infrastructure like Mantle, where it is very secure. And we also understand not only the security of the technology, but as earlier, I talked about how the liquidations of these things works, under what assumptions do these oracles work at, and we understand where the safety is to create such a specific strategy that you otherwise would have done yourself. But for you to create such a strategy, you would have taken just as much time as we took, if not longer, to even decide on a proper strategy here, right? So that sourcing process that Luffy mentioned is also critical.
That is
I'd like to add on that. Usually, these types of setups, it's because there is so many things going on in the back end, right? It actually involves quite a bit of expertise. It's usually not a normal earn product that a centralized exchange will usually offer to retail. This is something usually it will offer to maybe some of the DeFi savvy or high net worth. It's more as an exclusive touch product because it's safe. It's high yield, and a lot of if some other centralized might not offer it as a shelf product, basically just list it out there. But we took a completely different approach. We just let it go on the shelf. That it doesn't matter if you have $1 million or $10, you can subscribe, and we can absorb whatever you subscribe to the strategy. It doesn't matter if you are like VIP 99 or you are just a regular $1,000 retail, right? Everyone is the same, right? We want to offer the same level of product offering as well as the accessibility to our Bybit users through a simple product like this. And so far it has been working out. And this will always be our philosophy. Yes, we might add some VIP perks later on for a similar product, but so far, we want to make sure everyone is having a fair start.
Okay. And last but not least, Luffy, would you like to add some comment as well about this question?
Yeah, sure. I totally echo what Jerry said just now. In order to understand how this product is different than most of the bots on the market, I think the critical thing is to understand the starting point of this product. The starting point is the target users. That's the centralized exchange users. They're totally different than the on-chain users, those DeFi veterans, in terms of the scope, the size, their knowledge and expertise in DeFi, and their risk appetite. Everything is totally different. Even the redemption, how to redeem it, it's a totally different standard. So that's, I think, the standard, the starting point. Now, in this case, automation first plays a huge role here because we know the strategy, the product is facing a huge amount of users from a CeFi. If you're comparing the amount of users of CeFi and DeFi, well, DeFi is almost nothing. DeFi users accounted for less than 5% of the total crypto users, I would say. And Bybit is one of the largest, centralized exchanges in the world, one of the largest crypto ecosystem in the world. How many users does Bybit have? So that leads to that leads to the importance of automation, because we got to handle different type of users with different appetite in terms of the flexibility and different size of users. Somebody might deposit $10, another user 5 million. How to get all those users in one vault and serve both purposes and provide the same level of flexibility and same level of security. That's something that can be achieved without automation. Unfortunately, Kian actually started as a on-chain yield strategy automation platform when it was launched initially. We wanted to package our 2.5-year on-chain yield strategy automation experience and expertise into product to make it public to users. So that's the starting point of Kian, and that's how automation plays a key role in Kian's design and product. Another thing is, design is also key in making such a product for our targeted audience from a huge crypto ecosystem and a huge centralized crypto ecosystem. Why? For example, the design of the strategy, let's take yield sources as an example. We got to make sure the yield source first reflect the cutting edge development of the on-chain ecosystem. So should we look at organic yield sources on-chain, or the hottest incentive-based yield source on-chain, or even at RWA, which is a trend? Does that make sense for these target users? They don't have any experiences in an on-chain yield. They probably have never touched upon RWA. Actually, quite a limited amount of on-chain users. Even on-chain users approached RWA before. So should we select that? So the pick of on-chain yield sources is pretty critical if we consider the targeted users. And the strategy parameter settings also is important when we consider the target group. In the specific Bybit stablecoin product, which is a pioneering product in the sex domain. If we look at the sex, products, and we're not talking about wallets or chains, central exchanges, large ones. Bybit is the first one that offer an advanced, on-chain yield strategy to users. Therefore, we got to be super conservative when setting parameters. So there are a bunch of things that we need to take care of. These are some of the points I would like to mention. Thank you, Thomas.
That's a great point. Thank you, Luffy. Yeah.
Thank you all. Before we move to FAQ, by the way, before we move to FAQ, if anyone has any questions on the floor, please just send them over. Our panel experts will answer them individually. So before we move to FAQ, I have two questions for the experts on this call. First, how would you see whether the TradFi users would adopt to this product as well? And second, how do you see the future of Mantle Vault for the foreseeable future?
I'll take one if you guys don't mind. I'll take question number 2. So obviously we've just started. Like I said, the product was barely launched for a month, right? And our first try, it's on a very, very conservative strategy, which will still become conservative, but we'll start to look elsewhere or even pick smarter strategies. But I think the future of Mantle Vault is not only relies in stablecoins. I think there are many other tokens or even RWAs or some other asset class that we can look into. For example, gold. Right? Precious metal has been extremely hot for the past little while, right? If there is one product right there out there that you can offer tokenized gold with a 2 to 3% yield return in gold, I think that product is going to sell as hotcakes, and that's something we're actually looking into right now. This is question number 1. Question number 2. And for TradFi users, I think maybe I'll let Joshua or Luffy take on this, but from my perspective, I think there is still quite a bit of a gap in terms of the understanding of on-chain yield strategies, right? Where a bunch of TradFi use their understandings is still relies on a centralized yield, right? Where this is on a completely different level. But Bybit, where as a centralized exchange, we are motivated to educate or even to bridge those two together. And I think in the short future, you will see RWAs, TradFi's on-chain yield strategy all mingles together in a very, very short, I think in the next, I wouldn't say in the next 3 to 6 months, but I think in the next year or so, you're definitely going to see less clear boundaries among the TradFi, the RWAs, and the on-chain yield sources. That's my 2 cents.
That's great. Thank you, Jerry. And Joshua, I heard you from you were working in a bank before. So what do you think about the blending of TradFi and on-chain assets?
Yeah, definitely. So I have a lot to say about that. So I would say, in general, TradFi in banking, their innovation process has just primarily is about eliminating paper processes and automation, and AI, right? So, imagine all the bank branches that have been going away and banks have gotten bigger. So there have been automation. So automation is a big part of the banking trend. But then there came fintech, and then fintech was a lot about improving user experience. So it became very easy for people to use apps, use your smartphone, go onto this application, do the same processes of traditional finance, but you're always locked into where you are in your own jurisdiction, and you're kind of restricted by where you come from. I think where on-chain finance and DeFi and the future of RWAs represent these type of earn strategies is that you're marrying the fintech user experience, but you are able to now have access to where your capital is treated best. So what that means is, if a great strategy or a great source of lending rates happen on Aave, and they have been proven for multiple years, multiple crypto cycles, to properly redeem underlying supply funds, and you're battle tested for very long times. And if that's where the highest rates would be, that's where you'll be treated best, right, for your capital. I think naturally this is kind of like already a kind of a rate difference that incentivizes people to come in from traditional financial kind of services to the Web3 world. And I think this is just the start of the trend. As we see the regulations improve, as you see regulators experimenting more and more with real-world assets and how we understand them to be for better distribution.
Sounds great. So sounds like it's step-by-step evolution as we're happening. As we speak of evolution, we have the first question from the floor. So, from our audience, what is Bybit? What is Bybit and Mantle's next goal?
Yeah, sure. Maybe I can take that. I think Jerry also mentioned we are always on the lookout for the next kind of exciting yield strategy, and working together more closely. I think we did mention some things like real world assets that we can potentially have as earned products. So yeah, these are some of the key things that we are looking towards. Apart from that, of course, it's also our constant collaboration over the exchange, as well as the blockchain. So even in things like different tokens, listings, we're also marrying both on both sides as well. So I think the hope and the opportunity is that if you're a Bybit user, you will also be a Mantle user. If you're a Mantle user, you'll also be a Bybit user, and that to me is the best marriage of both worlds.
Mm. Thank you very much.
Yeah, mine will be great. Mine will be very, very short. So actually, I'm not gonna answer that right now. I think there will be an upcoming live stream from our CEO. Ben himself is going to talk about the entire outlook of the first half of 2026. So let's look at that instead of me rumbling here. I think that's going to be later this month, in about a week or so. But some of the keywords, I think it's financial infrastructure, accessibility, and bridging TradFis and TradFis and crypto. So let's look forward to that one.
Thank you, Jerry. For those who want to know more about Bybit and our next goal, do tune into our upcoming live stream with Ben, our CEO, where we'll talk on the 29th of Jan, where we'll talk more about our visions, our goals, and how we can benefit the market and the user. In that case, for this live stream, that will be all. Thank you very much for listening. I'm Thomas, and join you next time. Bye-bye.
Thank you, guys.
Thank you.
Bye.